So with today's move, Apple and Meta are now tied as the worst performers among the Magnificent Seven stocks this year, closely followed by Microsoft. So with earnings coming in less than 2 weeks, what will it take for Apple shares to stage a comeback? Tim, we'll start with you.
Well, welcome, Leslie Picker. It's so great to have you here.
Great to be here.
It's an interesting conversation to have on what was an extraordinary week, and Apple's just kind of like an afterthought. And that's kind of the problem here. I think that's the issue. I think with part of Apple's move to all-time highs, and as someone that's long Apple, and not necessarily because I think there's a lot going on, but because I think there's not a lot that's been priced in. I love the Google Gemini partnership. It's not a huge surprise. We know some of the drivers, certainly for Google, but also for Apple, was that DOJ settlement, the dynamic here where I think, ultimately, I believe Apple is still how much of the world is going to really live their AI better life. And that has yet to happen. And so the problem with Apple here is there have been a lot of drivers, as we just, Brian handed off the show to us and talked about small caps. Look, this year has been characterized by things that were not necessarily a big part of last year's trade, although, certain parts of the semis are. Apple's a perfect example of, I just think there's been better things to trade. I'm not that alarmed when you look at that succession of weeks lower. Okay, the headlines don't sound great there, but, stocks, whatever, down 6% in the last month. The problem is there's not a big catalyst here. The problem is it's 31 times forward. I can live with that in my portfolio.
Bonawyn, do you think that this is the year that it really joins the AI play in a big way?
I'm not
sure.
It's
something that everyone's been waiting on.
Well, yeah, all indications would actually suggest that they are in no rush to do that. And I think that's one, which is part of the downside and why you can probably still own it. But I think it's also why it has not had the same type of returns as, say, in NVIDIA or some of the more closely related cloud and AI names. With that said, I still think that services business is growing and that continues to defend margin. I don't think this is much of a trading vehicle. And I think 2025 was very much about owning high beta tradable names. Even into 2026, the story has been a rotation away from AI, big tech, and AI adjacent names into more old industry, economically cyclical and sensitive type of names. And so, like Tim said, there really is no catalyst there. I do think, the forward multiple is somewhat concerning, and until there is some catalyst, I don't see much upside. But, the rotation tends to mean revert at some point. And when you do see money flowing back into big tech, because there is still a certain defensive nature because of Apple's balance sheet, I don't think you can help but actually have that boat be risen along with the other. So no direct catalyst in the short term. That will likely be AI. And you still have the China overhang, but you still have a very strong service business. And ultimately, it's always going to be correlated with big tech. And there will be money, if it's for no other reason than passive investing, that continues to flow into that space.
Yeah, and maybe, Steve, there's a case to be made that kind of that tortoise mentality of Apple as it pertains to AI.
Safety.
Safety.
Rewarded for not chasing the AI dollars.
Well, that's what I was going to say. They still have a very huge cash hoard that they're able to deploy. They're not, in this arms race necessarily doing partnerships as opposed to really spending.
Yeah, I agree. And I think that's the strategy to take. And I think they will ultimately be rewarded. Bonawyn talked about the reversion trade. So there's been 9 times since 2000 where Apple traded down for 7 straight days. It always, obviously, you look at the chart, it always rebounded aggressively. Now you look at the cash balance sheet, $60 billion.
I kind of agree with what everybody has said here. I don't think that AI is the reason to get into Apple. They're not the pioneers in the space by any means. Steve, hit on probably the most important thing, which is that the services revenue, which is about a quarter of their business, growing at 14% versus the hardware side growing at about 4%. The company is going to do just shy of 4% free cash flow next year, so that makes it fairly safe. But at 31 times earnings and maybe 6.5%, possibly 7% top-line growth, it is probably fairly priced relative to the S&P more broadly. So, don't love it, don't hate it. I've actually been pretty impressed by their services revenue growth. I think that that's a demonstration that their installed base is really something they're going to be able to monetize. But, 7% growth, that's probably a little better than the market overall, but not a whole lot better.